On today's Hot Sheet, I'm discussing Fannie Mae's price expectations, home buying sentiment, and mom and pop institutions. Today is Tuesday, June 11, 2024. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into today's Hot Sheet. This is the only 24-hour look back on the housing industry in the last 24 hours. We do this every Monday through Thursday when the markets open at 9:30 Eastern, 6:30 on the West Coast. Hit the thumbs up, go down, and go ahead and press subscribe and the notification bell right down below. It's right there. You can do it. All right. Let me know in the live chat which market you're tuning in from, and let me know who's planning on going to the event of the year. That's right. BAM Mania is happening in Circa, Las Vegas. It's a brand new venue designed for agents of change just like you to have a great conference. That's October 18th. We have a VIP session on October 17th. Right now, we are in early bird pricing phase, and BAMX members, you get 25% off of that lowest price. You can use code HOT to get a discount as well on BAMX before you sign up and secure your BAM Mania tickets if you're not already a BAMX member. Expect it to be the conference of the year for agents of change who want to take advantage of everything that's going to happen post-August 17. There are some home price expectations on top of those expectations. This has just been put out by Fannie Mae. Home price expectation survey, their HPES, has been released. A panel of that was produced by Fannie Mae of 100 housing experts across the industry and academia for forecasts of national home price percentage changes in each of the coming 5-year calendar. See, why do I want to know what academia and housing experts think? This is curated into obviously an average, but why do I want to know? Because I don't want to be the person with a crystal ball, because nobody has one. Nobody knows where it's going. But I want to point to something about the future when I'm talking to clients. Hey, nobody knows what actually is going to happen, or we'd all be sitting over in Vegas, maybe not at BAM Mania, but just betting and winning and winning and winning if we had predictive analysis of the future. But here's what the experts are saying. They could be wrong, but here's what 100 of them have said. Here's what it's averaging out for their answers. Okay, this 2024 panelist average annual home price growth expectations look like this: 4.3% for the rest of the year, followed by 3.2 next year and 3.5 in 2026. Okay. Also, home price expectations, the most optimistic quartile says over the next 4 years, we could see a 32.9% gain. It's quite an increase here. We'd be getting going here in an upcoming year for sure. Panel wide, 20.8% over the next 4 years. And the most pessimistic still has home price expectations going up 8.7%. The expected cumulative house price change from 2024 today to 2028. The most pessimistic group out of the 100 experts still have home prices going up 8.7%. So we're going to get into home buyer sentiment. Is it a good time to buy? I don't think it's a good time to buy. It might be a bad time to buy. Well, in 4 years, it's certainly going to be more expensive to buy. And we look at the last 4 decades, we know that's the truth. Look at the last 4 decades, 90s, 2000s, the 10s, the 20s. You're talking 40+% gains in all but one, and that one was in the mid-30s. So it only gets more expensive to buy. Is it a good time or a bad time to buy? It depends. Are you going to have more money in the next 4 years? Are you expecting a huge windfall? Or do you want to start paying down debt today and start getting that appreciation? That's something that's going to be personalized for each buyer. The expectations are that the next 4 years are going to match the last 40 plus. Home prices are going to go up. They're not going to go down. Okay. So the experts are in line with that. Home price, annual home price growth expectations by year. The previous growth, home prices grew by 6.6% in 2023. So the 4.3, 3.2, 3.5 are down from what we just saw, but they're back to a normal level, more normalized level over the next 3 years. Okay. The latest forecast for 2024, 4.3% are higher than the previous quarter's expectations. They were at 3.8. So they've bumped this up. Now, next year, 25, 3.2 is coming in lower than the previous expectation of 3.4, but basically in line with where they were at. Here's some quotes. This is inside of your BAMX show notes. All BAMX members get hot sheet show notes each and every single day. Doug Duncan, Fannie Mae Senior Vice President, Chief Economist. By the way, we've read quotes from Doug in the past, and here's what he says now. The rise in mortgage rates in 2024 continued. Above trend home price growth continue to strain home price affordability. Listings have trended generally upward of late, suggesting to us that a rising number of current homeowners can no longer put off moving. Okay. However, we believe the ongoing affordability challenges are likely to weigh on how quickly new listings convert to actual sales. We talked about that yesterday when we looked at new listings and inventory. That's in line. Some people are going to have to I got to rip off, I have to relocate, even though it's not lining up perfectly for me. What do I dream up as being a perfect scenario financially for my move? Might not line up right there, but life happens. The things that dictate a move happen, and they are happening for some. All right, so there's your expert panel from Fannie Mae. There's a bunch of charts affiliated with that. That'll be inside of BAMX so that you can download those. Check those out if you want more information. Could be useful to you in your own marketing and stuff that you want to send out to your database. Something that your database is thinking about right now is that it's not a good time to buy. Unfortunately, citing unaffordability, 86% of consumers now say it's a bad time to buy a home, which of course means that only 14% say it's a good time to buy, which also, of course, is a record since they started doing the survey in 2010. That's right. From 2010 to today, consumers have never identified a worse time to buy a home. This is how your consumers think right now, in the moment. This is what they're feeling. With all this strong economy talk, you think it might be different. I know in November, there's at least one group that wants to believe that it is different for you. But we go back to last week and we look at Gen Z and millennials and what was most important to them, as well as Gen X and baby boomers in their top couple. It was the economy. I'm sorry, this was on Knowledge Brokers podcast. We talked about this on Knowledge Brokers podcast on Friday. We went what's most important for these groups when they're voting? There's an article on nowbam.com when they're going to be voting in November, and everybody in their top two had the economy. I think 3 out of 4 all had it as number 1. So if the economy is so good, why is it that everybody's like, I'm going into the voting polls in November, voting booths rather, voting for economy as my most important attribute to what's making up a great candidate? They're talking about the economy, which is supposed to be, we're being sold by some that it's a great economy. Well, if everybody's going in there saying it's most important to me, then the economy's not that great for many. Or maybe many just don't feel that great about it. Certainly the most ever recorded since doing this survey don't feel great about buying a home now. But what also remains true, when we look back at the last segment of, what are the projections of home prices? What have the last 4 decades shown us about home prices? Is that it may not be the best time, but it'll be a more expensive time in the future as home prices go up, maybe up the most optimistic saying 33%. So do you want to wait for when everybody feels like it's a good time? And it could be 33% higher and you could have more competition, which could push that number up even more if you're buying in a desirable location. Or while there's this feeling out there, and this is what I'd be talking, to buyers about, home buyers and investors. While most of the competition is retreating. We can see that in the mortgage application data. While most of the competition is down and out, saying it is a bad time to buy, almost 9 out of 10 consumers feel now is not an optimal time to buy. When you're going to buy something, you're in a competitive situation. It's a marketplace. Okay. Who else wants it? How do I get it? Okay. Well, if the people you're competing against feel like this, that they want to just go sit on the bench, grab some Gatorade, it might be time for you to get in the game. This is the conversation I'd be having with my buyers, investors. This might be the best time to be on the floor, stacking up wins, finding deals, uniquely identifying the opportunity. When competition vacuums out, you're going to have a voice to the sellers. You're going to have a voice that's going to be heard. It's not going to get lost in 30 offers. This is the pitch that I'd be delivering as an agent to my buyers, to my investors. Take advantage right now. Okay? You're not always going to get the stage all to yourself. I just saw a clip with Grant Cardone. You can love him or not. Here's why I would say, maybe if you've never loved Grant, you should go look up some of his content around the lawsuit. He thinks the lawsuit's ridiculous. He's out there sticking up for agents. So even if you hate him in the past, you gotta, maybe if you're an agent, respect him for that. But anyways, I see a clip out there from Grant Cardone about, and again, you want to be in the game when nobody is competing against you. There was a house he bought in Malibu, and the owner, didn't want to sell. He followed up with this guy for 19 months. The house wasn't on the market, and he said the seller was impossible to deal with. So in his mind, he's like, that's great news. He goes, because that means he's only going to be talking to me. If he's impossible to deal with, nobody else wants to deal with him. So I'm going to be able to go ahead and deal with him. So that's what he did. He went and just continued to follow up on this guy, and he ends up getting what he thought was a good deal. I don't know if it's a good deal or not. Maybe an agent from Malibu can tell us if he got a good deal. But he was the only voice. He was the only person on the stage. The property wasn't being marketed. Nobody wanted to deal with the seller. There he is following up. Took 19 months, whatever it took. And he ends up getting what he wants. He gets the deal. If a buyer really wants a great deal, well, is that going to be easier when you're the only one on the stage? Or is it going to be easier when it's crowded with everybody trying to buy? If 86% of people thought it was a great time to buy, your voice is going to get lost in the mix. Okay? This declining optimism as a market sentiment, consumer sentiment toward housing has declined, reflecting frustration over purchase affordability, stagnant mortgage rates, selling conditions. Homeowners' perception of selling conditions remain largely positive. These are opportunities. I don't care what the market, there was opportunities in other markets, but this is a clear opportunity to me. Don't think of it as anything different. Okay. Here's the home purchase sentiment down to 69.4. It's on a downward trend. Of course. Got it. Great. Spin it. So people understand that they've got an opportunity to go out and get the deals that they want, get what they're looking for in this market. Okay. One of the other things in this market you always hear about is institutional buyers. Wall Street, they own all the houses. You'll see ridiculous quote, 40%, 50%. It's not true, of course. We know, and we just got to keep reminding people. Have to keep reminding people. I'm going to a Resi Club piece right now. Institutional home ownership, which is just shy of 1% nationally. Okay, 1% nationally, not 40%, not 50%. What's institutional buyers? Institutional buyers are this number, groups owning at least 1,000 homes nationally. What's a much bigger home investor ownership group? It's the mom and pop owners, between 2 and 9 homes. So according to Parcel Labs API, which was just released, these 10 housing markets had the highest share of mom and pop ownership. Las Vegas, 13.7%, of single-family homes are owned by somebody who owns 2 or 9. Okay, that's a lot. Stockton, California, Sacramento, Fresno, Cape Coral, Florida, Riverside, California, Bakersfield, California, San Jose, California, Northport, assuming that's Northport, Florida, Oklahoma City, OKC. These are the locations, 10% and up, top 10 housing markets at the highest share of mom and pop ownership. That 2 to 9 buyer, that's who really owns single family homes. For when you talk about investors owning a bunch of these homes, really ordinary people own all these homes. Here's the percentage of single family housing stock owned by mom and pop. You can see less than 5% kind of scattered there in the Northeast, gets greater than 10% in the Southeast and the West, and then 5 to 10% in the middle, the Carolinas, Texas, those areas. By the way, charts will be available for you in BAMX, okay? According to Parcel Labs API, these are the 10 housing markets at the highest share of institutional. So where do institutionals own the most, and is it as much as these mom and pops? Nope, not even close. Atlanta institutional owns 4.3% of single family. That's the most. Atlanta is the metro with the most percentage of institutional ownership for single family homes, and it's only 4.3%. Jacksonville's 3.8, Charlotte's 3.2, Memphis is 3.1, Tampa's 2.8, Lakeland is 2.8, Orlando's 2.8, Indy is 2.8, Phoenix and Las Vegas round out the top 10. Las Vegas coming in at 2.5. Okay. Institutional buyers, aka Wall Street, do not own all the homes. Continue to help people know about the truth. Know what the truth is on demand in this market. Articulate it. It's an opportunity for buyers and investors. Also, know what the truth is on how many investors. So there's no homes because investors are buying it. Don't say that. Sounds silly. Don't repeat that because somebody else did. Okay. There you go. That's the kickoff here. Yesterday, we came in on a 30-year fixed at 7.17. So as we get into now this Tuesday this week, we're kind of hanging where we were at the end of last week on the 7.15 on the 30-year fixed. People are going to wait, or investors rather, not people, are going to wait and see what's going on with this FOMC meeting. That kicks off today. It's FOMC day. FOMC meeting kicks off today on this Tuesday. They'll finish up tomorrow, and then we'll obviously have the Jerome Powell press conference tomorrow afternoon. We'll cover it here in full detail as we do every Thursday morning after the meeting. What was the decision? We'll carve out all the moments. He mentioned housing. A lot of changes going on all at once. Not a problem if you're an agent of change. You're ready to meet them out the moment. And I'm ready to meet you in Vegas on October the 18th at Circa Las Vegas for BAM Mania. Make sure you grab your ticket down below. We're still in early bird pricing phase. Don't wait till they go up and you get FOMO. Just go ahead, grab it now, and you will thank yourself later. All right, that's your hot sheet for today. We'll see you back here tomorrow, 6:30 on the west, 9:30 on the east. Until then, toodaloo.